What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 22nd of 2019. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to spend some time to talk about why the demand for cryptocurrencies, and more specifically Bitcoin, is not coming from darknet criminals aiming to use it for illicit activities, but rather a wide plethora of different institutional investors that will drive the next wave of adoption for cryptocurrencies, going into a more risky environment in the sense of the global economy. So we've got lots of things to talk about. It's going to be a macro video, guys. I hope you'll stay around right after our quick sponsor. Alrighty, everyone, so let's go ahead and take a quick look across the board on the market, and then we'll talk about some of the good news that's really painting this picture of institutional interest. As we can see, most cryptocurrencies are in a no trend scenario right now, with a few outliers down in the red as well as in the green here. But again, we're going to be diving into some of our favorite altcoins this week, guys. I put in a lot of time last night on the altcoin video. It's coming very soon. However, we can see here in the sense of current time frame information and price data, valuations have remained relatively flat since we talked yesterday. There hasn't been any serious movement. As we talked about, most players are in a no trend scenario, and Bitcoin dominance has finally started to slow down here over the last few days, and in fact gave up about a percentage and a half up to altcoins, or more specifically other coins in this case, that have been gaining in this market. A few of the players that are moving are not really any of the big players. Litecoin, Ethereum, XRP have been relatively flat over the last day or two. Litecoin had a little bit of a bounce when we got the full kind of bounce up on Bitcoin in regards to testing down towards the low $9,000 range back to the $10,000 range. But again, we've been seeing kind of a flat trend at the moment. Now, is this a sign that we might be on the verge of an altcoin cycle soon? Well, in the last video, we talked about the 3 signs that we're watching, and it is one, but we want to more specifically see a sharp drop in Bitcoin dominance and really see a shift in liquidity to altcoins and going towards some of the key players that we're keeping an eye on. So let's talk about the bigger picture though, guys, and that is new liquidity coming into the space, not just current liquidity circulating between Bitcoin and altcoins. No, we have finally gotten actual an official launch of the back platform, sort of. Okay, I don't want to get your guys' hopes up too much. I know we have waited a very, very long time for Bakkt. Back during the later part of 2018, I was hoping sometime in the summer of 2019 that we would get it, because all the articles were saying that it was going to be in February or March, and lo and behold, it turns out that with the regulatory environment, things are always slow. And nonetheless, we are finally starting to have the platform launched to some degree. Now, bear in mind, this is going to be physically settled Bitcoin futures. Really good, because this is going to mean that as people are potentially buying these futures, they are actually setting physical demand for it. It's as similar to as they would buy it on the spot market. So this is going to be really good. It's going to set some demand and precedent for Bitcoin. But along with that as well, it's important to understand that even though as of today they are launching this testing, it is a very important day, I think, in the space of crypto. It is similar to the Fidelity investment portal for investing in cryptocurrencies, only going to be available for a select few key investors. I know they talk about that here in the article here. But the major thing here, this is it right here. The long-awaited announcement failed to budge the price of Bitcoin, which stagnated over the weekend. BTC traded from 10,600 at 8:45 UTC Monday, this time skipping a more dramatic weekend rally. The current round of accepted testing will be very limited, with a small pool of selected traders. Activity on the ICE, or basically one of the largest facilitators for exchanges, will be monitored for interest before eventually allowing full trading by the end of the year. The testing should be completed within a few weeks, expects back. Now, again, on my moral level, I think that this should be available to anyone who's got the brains and know how to test around with these products. But again, I kind of understand it in a sense. You know, when you're experimenting with something new like this, this is very standard. This isn't just something they're doing against Bitcoin. This is with most financial products. But especially with something as experimental as Bitcoin, I can kind of understand why they'd want to kind of take this one step at a time. At the same time, my cynical side makes me think that if these are actual facilitated trades and they're selecting a few people to be able to do it, this is kind of like, hey, we'll let you guys get in the door first and let the other people come later. It's kind of like, you know, like a bouncer letting in someone to skip the line or something, which to me doesn't seem very fair. Anyways, Long story short, we are making progress, guys. I think with the success of Bakkt as well as Ledger X, we are going to potentially see a Bitcoin ETF. Question is, are we really going to see demand through Bakkt? I think that's a very good question. As we can see, price didn't really move much. Have we already priced this in? Is it that there's not going to be many people buying it? Is the interface or the amount of outlets where people will be able to buy these futures going to be expanded, or is it simply going to be facilitated through Bakkt alone, through their applications and their interfaces? I'd be really curious to see how this is going to turn out. I hope this becomes available to a lot of different brokerage platforms out there, but we'll have to see as time progresses. Now, as we start to see these signs of institutional and also retail liquidity, to be fair, Bakkt will eventually be available to retail investors. As we see this demand coming in for crypto, we have to ask, is it the cyber criminals that are actually propping up the price of Bitcoin? Have they been the big buyers this year? Well, no, of course they haven't. People who have been facilitating drug trade, transactions, all kinds of illicit activities have not been doing it through Bitcoin, but rather through cash. Now, we had talked about one of the charts we're going to look at, one of the statistics, and that was during the kind of rant that I had talking about Steve Mnuchin, the Treasury Secretary of the United States, continuing to blatantly defend the dollar and continue to dismantle Bitcoin as being used for criminal activity. But in reality, we can see here that the picture is quite different. We not only see, and I'll actually zoom in here, it's going to be a tad bit blurry, but we can see here that for each dollar in BTC spent, meaning that for every dollar you spend in the sense of using Bitcoin as currency, there is at least $800 laundered in cash across the world. So you can see there's a huge scale here and the difference of, how Bitcoin is used versus the US dollar. There's actually, I think, a statistic where some percentage of US dollars have at least some trace of cocaine on them. It's pretty wild, like some kind of trace of cocaine or illicit drugs. Not to mention as well, we can see here the stock of NANO money supply, basically M1, and we can see as well that there's a very, very low circulating amount comparative to traditional cash in this case. So very important to see some of these key differences in the data here. And it's just because of the fact that criminals mainly want something that's completely untraceable. With companies like Chain Analysis and pretty much every gateway to Bitcoin having KYC, you're not going to likely have an anonymous pathway to Bitcoin. Now, I will make one exception. I'm not going to lie to you guys. I'm not going to say that this isn't a reality. One of the things that people have to be concerned about, if you are worried about money laundering or people, being able to use Bitcoin anonymously, is that they can mine Bitcoin, right? They could, for example, if they have enough money, run their own mining rig, and if they're lucky enough to not get caught through the power grid consuming enough energy and getting the government and those private companies to be a little bit questionable about where that money and that energy is going, then you could technically mint new Bitcoin without a traceable history, and those Bitcoin are completely fungible and private. They are, just as equal to Bitcoin. However, they are private and don't have any track record behind them. So that is one way where you could technically launder money. And that's why in China we have seen some illegal mining facilities that aren't paying taxes starting to get shut down, right? So I think the Chinese government, they aren't stopping mining operations, nor is pretty much any government. But if you aren't registering and paying taxes, then that's where they start to crack down. Now, there's very few exceptions when you can get away with that, when you're on renewable energy, right? But still, even building a giant renewable facility and not getting earnings from paying it out to the grid or using it for some commercial use case that's clear to the government or your utility provider is still very difficult to do. It's not something that happens on the mainstream. Most Bitcoin mining is likely registered to some degree. So again, dispelling the FUD here. It's just not used for criminals. The data is overwhelmingly supporting this. And this, by the way, was an analysis, this 800 to $1 ratio. Some people are like, oh, where are you getting that? It's from Chain Analysis in the United National Office of Drugs and Crime. So look, you're going to get the most biased report from these two, okay? And it's good to see that they're coming out with such stark data to show that cash is really the criminal's choice, right? Or at least used for illicit activities. I wouldn't want to say so much, if you want to consume drugs that may be seen as illicit or illegal by the government, that you're a terrible person. But maybe dealing some of those harder drugs, I probably wouldn't see you in the brightest light. But anyways, let's go ahead and talk about what's really driving this demand, guys. We talked about Bakkt. We talked about how there's going to be new entryways into cryptocurrencies, but we have to talk about the problem. Why is it that Bitcoin is so essential right now? Why is it that this this mad lad of a digital currency that's tied to no government, that has no military to back it up, this absolute stallion of a currency that's not yielding anything, it's not paying an interest rate, is not backed by any government or any force of any sort, and yet is still the optimal choice for the global economy going into the next few years. Well, it has to do with one thing. We talked about it the other day, but it's an even bigger problem than what we talked about. The $13 to $14 trillion negative yielding bond market. Now, we've talked about how basically we live in some crazy fantasy land in the financial space where it's somehow okay to a degree to hold something that's negative yielding. This basically means that you are buying treasuries in this case, or bonds, if it's in the private bonds or treasuries, whatever it may be, that you're buying these and that you are going to pay out an interest rate holding these to those who are borrowing your money in the first place, the people you gave cash to in order to acquire those treasuries originally. Think about that for a second. It's pretty wild, isn't it? Well, the problem goes even further. Now, if we take a look at the actual text of the article here on Outline, this is basically propping up the idea of what's been pushing up gold's price over the last few months. And that is that this problem is not just a $14 trillion market of negative yielding interest rates. The negative spread in this case for overall bonds and treasuries, the amount of bonds that are negative yielding, actually can leap up to the 20, if not $30 trillion range. And this is when you're factoring in for the factor of inflation. So you might be able to make a yield on your treasury note, right? Or maybe I own a treasury note to the Turkish lira, for example, and it might pay me 5% interest every year. Sounds great on paper, right? Well, if the inflation of the underlying currency is 6 or 7%, that is now negative yielding because I'm not keeping up with inflation. I'm losing money in that case. So we have to understand that this is an even bigger problem than what we've been talking about. And as take a look through here, they talk about how kind of the breakthrough in gold has been propagated by this. And the fact is, it's funny because gold doesn't produce any kind of yields. And the fact it's always been mocked in this case. It's like, oh, why are you holding gold? Like, assets are flying off the roof. They pay dividends. The return is much greater. Not to mention, at least on treasury notes, I'm getting paid a direct yield in this case, right? On the case of gold, we are now seeing, again, an immense amount of capital on the sidelines ready to flow out of treasuries. Even before accounting for the effects of inflation, the universal bonds yielding less than nothing hit a record of $13 trillion this month. And add in the corrosive effect of general price rises, and that number swells to $25 trillion. It could even top to $30 trillion if the Fed decides to cut rates twice this year. And I have no doubt you're going to get at least 2 rate cuts this year, guys. You're going to probably get around 2 or 3, and more going into 2020 until we eventually hit back down to 0, because they're in a pickle right now. When they start cutting, they're not going to stop. This isn't going to be, in my opinion, a zigzag where you're going to have, healthy rate increases, then a correction, and then healthy rate increases to new highs, and then healthy correction. It's not going to be like that. This is a serious problem here. It's not so much weakness in the United States, it's weakness, I think, in the overall broader economy, in the sense that in Europe right now, banks are not able to actually turn a profit right now in a zero rate environment, right? And you also have as well stagnation and growth in the sense of GDP, manufacturing data, you name it. And this is why people are flocking to something like gold or something like silver or something like Bitcoin. Why is Bitcoin relevant in this environment? It doesn't yield anything. It's because it is a hedge in this case. If you were to hold Bitcoin, you not only know you have a fixed monetary supply, even better than gold, you know that even though there can be inflation in gold, in the case of Bitcoin, the inflation rate is predictable and eventually will cap out at 21 million coins. And it is going to get smaller and smaller and smaller in the sense of that inflation rate over the next few years as we go into the block halving. So with Bitcoin, you have a predictable system of monetary policy. There is nothing that's going to change that. Sure, yeah, there's talks about miners changing it possibly way down far in the future. That would probably come up with the run out of the block reward and the incentive for miners to facilitate transactions. But that's something that's way down the road, guys. It's, we probably won't even be alive by that time, or maybe modern medicine creates something magical that leads us to having to be relative figures at that time who actually get to decide what happens. But the fact of the matter is that Bitcoin so early on, with its fixed monetary policy, is going to sweep the world stage, especially institutional investors over the next few years. And I think the sparked rally that we've had, the emergent rally we've had out of the accumulation period has proven that. But we've also seen it in gold. I mean, gold has, for example, wedged out here, continued carrying up to higher levels for this year, and is testing levels we haven't seen in over 6 to 7 years, guys. I mean, look at this. We haven't been back here since 2013. This is the moment that gold bugs have been waiting for. Like, I know for so many years, people were on the gold and silver train, and they started giving up on it back here in 2018. I hope you held strong, guys. I hope you held strong, because it's paying off for you now. And this is just the start to this cycle. If people think that this break on the wedge is not a big deal, that this negative yielding market of up to $25 to $30 trillion worth of assets, basically treasuries and bonds, isn't a big deal, they've got another thing coming, because this is only going to get worse, right? Banks are already struggling to manage monetary policy, and if we continue to see a growth in these negative yielding things, these negative yielding products, eventually the gig will be up. People will en masse sell them. I have no doubt that as the bond market has been moving in sync with stocks to the upside, that you're going to see a hit on equities as well. People are going to eventually move out, because we are entering into we actually are in the longest expansion in U.S. history, that this is eventually going to turn over quite soon. I don't know about a full-scale recession, but I think if you get a very big shock in traditional bond and treasury markets, you're probably going to get the same in equity markets. And a lot of that capital, especially if we get something like a Bitcoin ETF, is going to flow into cryptocurrency markets. And boy, will that rally be interesting. It's going to be an exciting time, guys. We've got a lot of things to look forward to. Again, just a rant from your friendly macro trader Nicholas Merton here today. Hope you guys enjoyed the video. If you guys liked it, please give a like down below. And someone left a really interesting idea as well. I know I always ask you guys to comment on the video, and I really do want to incentivize you guys. I know a lot of you just, I've had a lot of people comment, they just say, oh, I just listen to Nick on my car ride to work and everything. And I don't want you guys texting and driving. If that's the case, drive away, and I appreciate that you listen to me, but focus on the road, and maybe later on you can leave a comment and stuff when you get to work. But if you guys can, leave some more comments and stuff. I'd love to know what you all think about this. For those of you who are really active viewers of the channel, we are in really interesting times. I'm so humbled to be here with you guys talking about it all, and I can't wait to bring any news that I find as time progresses towards you guys in regards to these topics. So anyways, guys, that's going to be it for the video. Thank you all so much for watching. Love to hear what you think down below in the comments. But until the next video, I will see you all in the next one. Stay tuned.